Hello, salam alaikum, good afternoon, everyone, or good morning or evening, depending on the part of the world you're joining us from. Today's webinar speaker needs no introduction. His name is Mr. Alexander Aronson with the IVSC. Alex is the technical director of the IVSC, and he's a fellow of Takim. Also, on your panel today will be our interpreter, Mohammed. Mohammed will be offering the live Arabic translation. So if you want to listen to this session in English, feel free to do so by selecting the interpretation icon towards the bottom of your screen. And if you want to listen to it live in Arabic, you can select the Arabic option. The slides for today are in English. Takim is planning a second webinar at some stage in Q2 when the IVS has been fully translated to Arabic, and that will have accompanying Arabic slides. In the meantime, in between this webinar and the next webinar, if the slides are ready or when the slides are ready, they will be shared with you via the QR code, which you see on your screen. So scan the QR code when we get to that stage. And once the slides are ready ahead of the next webinar, you will be able to receive them in Arabic. My name is Parker Winful. I'm your moderator for today, and I will be helping on the Q&A with Alex. I'm a consultant director for Takim, and I advise Takim on valuation matters. So Alex, over to you.
Thank you very much, and salam alaikum. Thank you for all joining this presentation on the latest edition of the International Valuation Standards, which are effective from the 31st of January 2025. We encourage early adoption, but that is the effective date. So first of all, I'd like to give you a little bit of an overview of the International Valuation Standards Council. So the IVSC's mission is to establish is to build trust in valuation by establishing globally consistent, high-quality international valuation standards across all asset classes, and by encouraging quality valuation professionalism globally. The IVSC is a global organization with partners including other standard setters, regulators, valuation professional organizations, valuation service providers, and the end users of valuation information. IVSC has signed formal agreements with IOSCO, with UN World International Property Organization, whereby the organizations endeavor to enhance their collaboration with the aim of identifying approaches to promote high quality valuation practices. IVS standards are principle based and they're applicable for valuations of any asset or liability. The enhanced standards were issued on the 31st of January 2024, with required adoption by the 31st of January 2025. And further details can be obtained on the IVSC website, which is www.ivsc.org. So IVSC, the latest edition of the International Valuation Standards, was published on 31st of January 2024 with the effective date of the 31st of January 2025. And one of the things you'll notice when you go into the International Valuation Standards is that it's now interactive. We've tried to make it as interactive as possible. So if you hover over a definition shown in italics within the standards, then the definition will come up in front of you. You can also easily move between chapters by clicking on the chevrons that are at the top of each chapter. You can also click on references to go to the relevant section. And from this PR code that you see here, I'm not very good with them myself, but if you scan it with your telephone, it will take you to a page where you can see a copy of the presentation, or you can buy a copy of the standards in English. As Paco said, the Arabic translation will be available later this year. It is in the process of being translated at the moment, and the English hard copy will be available in the next few weeks. So first of all, I'd like to explain a bit about the structure of the International Valuation Standard. So the first thing to note is whatever you are valuing, it doesn't matter what, the first place of reference is the general standards, because the general standards relate to the valuation of all assets and all liabilities. So you can see here on the top line that is shown in black, the actual general standards. It's everything from the valuation framework, scope of work, all the way through to documentation and reporting in IVS 106. So it is basically everything that you need to do from your initial instruction to your final report. Then underneath that, we have asset standards, and the asset standards relate to particular assets and liabilities. You can see the ones shown in blue all relate to business valuation. The ones in green relate to tangible assets valuation, which is both mine and Paco's speciality. And we've had a very enjoyable time on the tangible assets board, working through the standards and the consultation responses that we received from everyone. So thank you for those, to make sure that the standard is fit for purpose. And IVS 500 refers to financial instruments. So let's say you are valuing a real property interest. First of all, you would look at all the general standards to see the requirements in relation to that. And then you would look at IVS 400 real property interest to see if any additional clarification is required in relation to that standard. Now, when we were starting on the revisions to IVS, we had a number of enhancement project goals. So what we wanted to do was address changes in global markets and global valuation, including the increased use of technology and the abundance of available data sources. We wanted to describe the roles and responsibilities of specialists and service providers, increasingly used by valuers in the performance of valuation. So you may get someone in to help you with the data, you may get someone in relation to models. At the end of the day, it is still the valuer's responsibility, but we have additional requirements within the standard in relation to the use of specialists and service providers. We also wanted to align IVS with the valuation processes that valuers perform to provide clarity, understandability, and relevance to stakeholders, which include financial institutions, investors, and regulators. Remember, these are international valuation standards, and valuation is a process, and there are many people other than the valuer involved in that process. So we wanted to make sure that it include all those parties. We wanted to create standards which allowed for new types of assets or liabilities and expanded the application of valuation into areas such as environmental, social, and governance, which you may also know as ESG. And we wanted to provide consistent requirements across all assets and liabilities. So we wanted to make sure that there were no contradictions within the standard. And you can see here the actual process, and you can see that we've been on quite a long journey to actually publish the standards. So first of all, we developed draft standards based on feedback from the IVS agenda consultation, which was published in 2020, and the IVS additional technical revisions, which were published in 2021. We issued an exposure draft on the 28th of April 2023, and this was subject to a 90-day consultation period, which closed on the 28th of July 2023. And we received over 116 responses to the consultation. Now, putting those responses into perspective, a lot of those responses will have come from large organizations like Taqeem that represent thousands of members. And therefore, though there's 116 responses, it actually represented thousands of respondents, and more accurately, hundreds of thousands of respondents. The IVSC Standards Review Board and the Asset Board assessed the responses, and we actually analysed every single response that we received. We used a traffic light system to see whether action was required in relation to that response. And then we updated the draft standards. And on the 29th of November last year, we had a public meeting where the SRB voted on the updates proposed based on the consultation and approved the revised standard for publication. And the standard was published on the 31st of January. Now, looking at the key changes within the standards, and don't worry, we're going to go through each of these changes individually in the next slides before going to a Q&A session. But you can see here a summary of the key changes to the general standard. So what we tried to do was have a structured valuation framework to clarify key terms. We've included a new chapter on data and inputs. Data and inputs is an increasingly important part of the valuation process. We've also included a new chapter on valuation models. You'll notice that the IVS 100 valuation framework includes valuation process quality controls. We also expanded the requirements in IVS 106, which is documentation and reporting, to include greater reporting requirements. Within IVS 104, data and inputs, you'll notice that we've incorporated the appendices on ESG considerations. So we wanted to make sure that the standards followed the revised practices in ESG. We also wanted to deal with valuation reviews. It was another area that we got a number of comments in relation to, and also compliance. So starting off with the clarification of key concepts. So first of all, you'll notice that we developed a framework which applies to all valuations. It doesn't matter whether you're a business valuer, tangible assets valuer, plant and equipment valuer, you would still follow the same process that you can see in the chevrons in this diagram. And this valuation framework can not only be universally applied across all classes of assets and liability, but it ensures a systematic approach to enhance rigor and control in valuation processes, and most importantly of all, to mitigate valuation risk, because that is a key aspect of what we're doing in the valuations to ensure the accuracy and consistency of our valuations in all markets. The asset standards provide additional requirements to the general standards for specific assets and liabilities, and you'll also notice that we've included appendices, and these provide additional information and requirements for certain concepts articulated in various chapters. So for example, IVS 103, Valuation Approaches, has an appendices that looks at the valuation methods and the premises of value. We've also tried to clarify key concepts. So we've looked at requirements that must be followed in all valuations and those that should be followed in certain circumstances. So within the standard, where it says must, it is mandatory. Where it says should, it's presumptively mandatory. So you should probably do it unless you've got a good reason for not doing it. It could be a variation due to requirements within the Kingdom of Saudi Arabia. So just state that within your documentation or within your file so people know the reason why you varied from it. Now, we've also made distinctions between valuations and valuation reviews, particularly in the scope of work of and the reporting section of the standard. Now, I'm going to spend a little bit of time going through valuations and valuation reviews here. As Paco will remember, we received quite a number of comments in relation to this, and not everyone was sure of the difference. So a valuation is the act or process of forming a conclusion of value on a value as of a valuation date that is prepared in compliance with IVS. So it's actually what we do. It's a valuation. A valuation review is either a valuation process review or a value review, or both. And I've just grabbed a copy of the standard here because it's probably helpful for me to just read you the definitions of both of those and talk you through them a little bit. So a valuation process view is an analysis by a valuer to assess compliance with IVS or a component of IVS as applicable as at a valuation date. And this doesn't include an opinion of value. So you get a report, you're looking at it, and what you're looking is to see, is this report IVS compliant? Does it meet the requirements within IVS? And this is what we would call a valuation process review. A value review, which is slightly trickier because despite the title, it does not include providing a valuation, is a valuer applying IVS to provide an opinion on the value of another valuer's work. So what we would be doing is we would be looking at the comparables within a valuation. We might be looking at the yields. It would depend on the nature of an instruction. And a valuation review can be either. It can either be a review of the process to check that it's IVS compliant. It could be a review of the components of the valuation to give the valuer's opinion, or it could be both. But the thing to notice is that if you are providing a new valuation, i.e. a new value, this is not a valuation review. This is a valuation. And all the other requirements contained within IVS must apply. Now, I know that in the Kingdom of Saudi Arabia, you have very specific requirements in the manual in relation to valuation review. And obviously, you have to follow the requirements within your country in order to produce an IVS compliant valuation. Now, we've also clarified the section on compliance with IVS and other legal, regulatory and reporting standards. And this section, it not only clarifies the necessity of adhering to general and asset standards, but it prioritizes legal and regulatory requirements, and where conflict arises, you've got to follow the legal, regulatory and reporting requirements within the country that you are operating in order to produce an IVS compliant valuation. In fact, we say within the sections, which you'll find in IVS 100 valuation framework, in order to be IVS compliant, the valuation must meet the requirements of the general standards, the appendices, as well as the asset standards if applicable. IVS consists of mandatory requirements that must be followed in order to state that a valuation was performed in compliance with IVS. And then here is the real important bit for you. It's 40.4. If legal, statutory, regulatory, and or other authoritative requirements appropriate for the purpose and jurisdiction of the value conflict with IVS, such requirements should be prioritized, explained, documented, and reported in order to remain compliant with IVS. So you have to follow the requirements within the jurisdiction in which you are based. So moving forward from there, and I'm probably expecting that Paco and myself will get a few questions in relation to that when we have our Q&A section in a minute as well. Data and inputs. This is a new standard within IVS. It's IVS 104. And it's been added to address the importance of data quality and valuations. And it requires valuers to assess and select data and inputs using their professional judgment. And you'll notice in IVS, we've defined data. Data is the quantitative and qualitative information available to the valuer. So it's the macro, it's all the information that you may consider. Whereas an input is the information that you actually use. It's the data assumptions and adjustments determined to be relevant and assessed or selected by the valuer to be used in the valuation based upon their professional judgment. Now, when we got a lot of questions in relation to the characteristics of data, and people asking what is the most important characteristic of data to follow. And you can see here, it's relevant and observable data. So that is the most important. First of all, your data needs to be relevant and observable. And then the valuer must apply their professional judgment to balance the characteristics of relevant data below. And we've got 4 of them listed here, the main 4 characteristics. So it's accuracy, data is free from error and bias, and reflect the characteristics that they are designed to measure. Completeness, the set of data are sufficient to address attributes of the assets and liabilities. Timeliness, data reflects the market conditions as of the valuation date. And transparency, the source of data can be traced from their origin. Now, we recognize that not all data will have all of these characteristics. We wish it did, but often there are challenges in relation to finding data. So you can only use the data that is available in the market, but the valuer has to use his professional judgment to maximize as many of these characteristics as possible within the valuation process. And the next new standard that we've incorporated is valuation models. And this addresses the selection and use and stipulates that models must be supplemented by professional judgment to achieve IVS compliance. And before going into the characteristics, I should make one point here that is very clear and bold at the beginning of this chapter. IVS 105 addresses the selection and use of valuation models to be used in the valuation process, but no model without a valuer applying professional judgment, for example, an automated valuation model, can produce an IVS compliant valuation. So when you are using a model and it goes into details, you need to understand the model and the limitations of the model. You can't just take a black box, put some numbers in it, pop out with a figure and say, I've done a valuation. That's not a valuation. We could have a long discussion on it. Paco and myself may see it as a calculation. So, you know, we're not saying AVMs can't be used. They're a very useful tool within the valuation process, but it needs to include the professional judgment of the valuer. Also in the model creation, because when a model is created, there are certain limitations within that model, and they need to understand the valuation process to ensure that the model is working correctly. So you can see here that the characteristics of the model is very similar to that of data, and that's because data and models are interconnected. Sometimes you look at the data first, you'll put it in the model, you might find that the model is not working correctly with that data, and you might go back and you look at the data. So we wanted to make sure that it was very clear. And once again, the valuer must apply professional judgment to balance the characteristics of the valuation model in order to choose the most appropriate valuation model for their work. And the characteristics here are shown as accuracy. The valuation model is free from error and functions in a manner consistent with the objectives of the valuation. Completeness. The valuation model addresses all the features of the asset and/or liability to determine value. Timeliness. The valuation model reflects the market conditions as of the valuation date. And transparency. All persons preparing and relying on the valuation model must understand how the valuation model works and its inherent limitations. That's the bit that I was talking about in relation to a valuer. Now, once again, we received many questions on this, and people said, okay, I understand, but what is the overarching characteristic? And in this case, it's to have an appropriate valuation model. So the valuation model must be appropriate for the work that you are carrying out. So just moving forward from here, and we will take questions on this topic and provide additional clarification, particularly in the relation to what it means to key members. Valuation process quality control. So IVS 400, the valuation framework, integrates valuation process quality control as a core component to ensure objective, transparent valuations that adhere to IVS and mitigate valuation risk. And there must be valuation process quality controls around the valuation process. We believe that all valuations need to have a degree of review and challenge. So a valuer should conclude that the level of valuation risk is appropriate given the intended use, the intended user, the characteristics of the asset or liability being valued, and the complexity of the valuation. And I'm just going to quickly go through a few sections within this chapter. So there must...
Alex, sorry to interrupt. Just before you move on to going through the sections within the chapters. So to the audience, thank you very much for your patience. There's a Q&A button in there. I know questions are being submitted. As Alex explained, and I explained at the start of the webinar, we're going to take questions, not at the end, but at key stages. So please kindly type your questions in there, be it in Arabic or be it in English, and we'll answer all the questions you submit to us. In terms of audience members raising your hands, I understand that sometimes you want an immediate response, but so as not to interrupt the flow of the presentation or the webinar, I would really appreciate it if you type in your questions and we'll take them within the Q&A segments that are built into the presentation. Thank you. Thank you, Haitham. Thank you, everyone else. Yeah.
And
Alex,
for those of you who are keen to ask questions, and don't worry, I'm much like yourself. Paco will tell you I'm not very good at listening solidly for 2 hours, and I would normally like to speak within that process. Don't worry, we've only got 3 more slides to go through in relation to the general standards, and we're straight on the Q&A bit. So we'll be there very soon. So I just wanted to read a little bit about valuation process quality control. So we believe that there has to be valuation process quality controls around the valuation process. And not only do the controls help ensure that valuations are performed objectively, transparency, and without bias, but also that they're in compliance with IVS. The extent of the control should be determined having regard to the factors that are shown here: intended use, intended user, characteristics of the asset or liability being valued, or complexity of their own valuation. And one of the questions we get asked, which was quite difficult for us to deal with, is, I'm a sole practitioner. Can I quality control my own work? And we clearly state that valuers may perform monitoring procedures with the respect of their own compliance and their control policies and procedures if the valuers are able to address valuation risk. So you have to do a certain degree of review and challenge even within your own work, to assess the valuation risk. And also, a valuer should conclude that the level of valuation risk, subject to controls in place, is appropriate given the factors shown below. I'm now going to move to documentation, and for me, documentation is an extremely important part. And it's partly because often we get challenged in our valuations, not at the time that we do it, but 3 years later when there's been a coronavirus crisis or a financial crisis. And that documentation is your protection in the case of any challenge, because you can say, yes, I did consider this. It is within my documentation. Also, documentation is the macro. We'll always have more information available on file in our documentation than we may have in our valuation report. So we include documentation requirements to maintain sufficient records of the valuation and processes and conclusion to help ensure consistency, professionalism, transparency, comparability, and trust in valuation. And documentation should describe professional judgments made during the valuation to assess and manage valuation risk. And I just thought I'd read some questions, some bits of the section in relation to that. Documentation is the written record of the valuation or valuation review and may include communications with the client, working papers or both, used to support the conclusions reached and compliance with IVS. Documentation must be maintained to describe the valuation or valuation review and must be sufficient to describe the conclusion reached by the valuer. Documentation must be adequate to allow a valuer applying professional judgment to understand the scope of the valuation, the work performed, and the conclusions reached. Now, in all cases, documentation should describe the valuation or valuation review and how the valuer managed valuation risks. And valuers must keep a copy of any report issued on the value and a record of the valuation work performed for a period in accordance with legal, regulatory, authoritative, or contractual requirements relative to the intended use. And the reason that I state this is each jurisdiction, and to the extent professional bodies, will have their own requirements in relation to how long you should keep the documentation for. So if you are valuing outside the Kingdom of Saudi Arabia, please be aware that they may have different documentation requirements, and you need to be aware of those for how long you need to keep it. I think as an RICS member, it works out almost indefinitely, 7 years, but then from the last year, it can be extended another 6 years. So please check what your actual requirements are. Now, the other really important bit that we've included within the standard, and when I say they're all important in my mind, to be honest with you, but another really vital section is the appendices that we've added to IVS 104 data and inputs on environmental, social, and governance considerations. So reflecting the growing global focus, IVS has expanded ESG considerations in valuations across all specialisms. And we've included an appendix on ESG, which requires the valuers to consider the impact of significant ESG factors to the extent that they are measurable. Not everything is measurable. It's a mix of qualitative and quantitative requirements, and would be considered reasonable by a valuer providing professional judgment. Now, we have noted that ESG is still in developmental stage, and therefore further changes are anticipated, and therefore it's very much the onus is on the valuer. The valuer should be aware of relevant legislation and frameworks in relation to the environmental, social, and governance factors impacting a valuation. So, for example, the International Sustainability Standards Board have issued a number of standards. in relation to ESG that largely relate to financial reporting. If you're working in Europe, there is an EU taxonomy, but each country is sort of moving at its own pace. And E, S, and G is not necessarily the same thing in every country. In some countries, you may be looking at carbon neutral buildings. In other countries, you may still be dealing with infrastructure such as electricity and water. So it can vary. And within the standard, we state two things. The impact of significant ESG factors should be considered in determining the value of a company, asset, or liability. And if you're confused as to which factors to consider, we do state that ESG factors and the ESG regulatory environment should be considered in valuations to the extent that they are measurable and also considered reasonable by a valuer applying professional judgment. So if you're not sure what you should do, look at what your peers are doing, look at what your colleagues are doing, look at what they're considering, and use your professional judgment to see the extent that you need to go in relation to that. Now, for the 11 people who are very keen on screen, I have good news for you. You don't have to hear my voice solidly now. You have both myself and Paco, and we will do our best to answer your questions. If there's any questions that we feel we can't answer or we want to give a more considered response to, please don't worry. We will come back and get you a proper response to those questions. So over to you, Paco, and thank you.
Thank you, Alex, and thank you, audience, for your patience. To Faisal, Sultan, and a couple of Master Sultan Al-Habi, and a couple of other people who put in Q&As. First of all, peace be upon you all. Salam alaikum. I try to respond to you individually, but this answer captures all of your statements, right? So peace be unto you all, and peace be unto the entire audience. To the next question, which is from an anonymous attendee. The question reads, how many new general standards did we notice? Just standard 100 and standard 106? And also, is there any addition to the previous asset standards in the last version at the end of January 31st, 2022? I'll break that into two parts. So let's deal with the new general standards first. Alex referred to 100 and 106. Alex, I think in answering that, we might want to talk a bit about the reorganization too, in terms of.
Okay, so what we've tried to do is we've restructured the standard. So there's not been a massive amount of change, though it looks like quite a big change, because we've restructured the standards in order to agree this valuation process applies to everyone. So previously we did have a framework, wasn't numbered. We've now got IVS 100, which is numbered and is the valuation framework. And it includes a new section on valuation process quality control. And obviously we've revised the compliance section because people were confused by the previous section within IVS. So we've tried to add clarity to that. Moving forward, the scope of work, IVS 101, hasn't really changed. So we have included a scope of work for valuation review, making the clarification of the difference between the two of them. IVS 102 basis of value hasn't really changed. What's happened is a lot of the information has been moved to the appendices, so all the bits that highlight the details, the definitions of the basis of value. Don't worry, they're still there. But what we wanted to do was make the basis of value very much about how you choose the correct basis of value for your valuation, because there's a number of basis of valuations around the world, you know, and we have the IVS defined basis of value, but many of you would use fair value, for which you have to refer to IFRS and not IVS. Within valuation approaches, IVS 10, we're testing my memory here, but I think it's IVS 103. Valuation approaches, the front section just looks at main approaches, market, income, and cost, and the ways that you
Alex, I think you froze. Alex. Okay, then until we have Alex back, can you hear me? Hopefully you can still hear me, and I'm still live. Yeah. But what Alex was talking about was in as much as the content itself has not changed much, there's been a significant restructuring. So certain asset standards or the asset standards stay the same in terms of the numbering order. The general standards, some of them have been renumbered to follow the evaluation process flow. Just a quick one, Mohammed, can you hear me? I just want to make sure there are other people who can still hear me apart from Alex. Okay. Alrighty. So in terms of
Apologies, my computer chose to crash at an inopportune moment, so I hope that's the only time that it does that during the course of today. Can you now hear me, Paco, again?
Yes, I can hear you loud and clear. What I tried to do was take over from where you left off, that in as much as the content of the of the general standards haven't changed much, there've been some reorganization. So what used to be compliance, which was 102, is no longer that. And what used to be reporting 103 is no longer that. It follows the evaluation process flow, more so from cradle to grave or cradle to the end of the process. Yeah. So Alex, you can continue with
Brilliant. Well, the
I
second
think you're
part
on
of the
103, yeah.
Yeah, so we went to 103 valuation approaches, and you'll notice that that chapter hasn't really changed, but what we do have is an appendix that deals with valuation models. IVS 104, data is data. This is a new chapter. It deals with data. Data was previously mentioned in IVS, but this highlights the importance of data within the valuation process. So we felt we needed to expand that. We've also added an appendices, which is on ESG considerations within the valuation process. IVS 105, valuation models, you will notice that it was previously a small section within valuation approaches. And in order to highlight the importance and the increasing use of models, we now have a separate chapter, IVS 105, that deals with valuation models. IVS 106, documentation and reporting. This hasn't really changed, though we've added requirements for ESG considerations within valuation reporting requirements. We've also added a bit on IVS compliant valuation. If you are doing an IVS compliant valuation, state it. State that this valuation is IVS compliant. But we have added additional sections in relation to documentation. Now, the second part of the question is easy. How do I know the changes? It wasn't easy for us to do from IVS 12022, but you'll notice we have a red line version. And in the red line version that you can access, you will see everything that has been moved within the standard, which is shown in blue, everything that has been changed, which is shown in red, and everything that has been deleted, which is shown in red with a line through, and the words that are in black are words that haven't been moved and haven't changed in any way. So if you do actually want a forensic examination, perhaps for your own requirements within your organization, I would suggest that you open both versions, the version of IVS that is, I'll call it the black line version. It doesn't show any of the changes, and then open the red line at the same time, and you will be able to see clearly how things have moved or changed since IVS 2022.
Thank you, Alex. To the last part of the question, right? The first related to general standards. The second bit or the last bit relates to asset standards. The question is, are there any additions to the previous asset standards from 2022?
So to a certain
2025, yeah.
To a certain extent, yes, but I don't want to get rid of the excitement of when we go through the asset standards next, to be honest with you. But let's take the tangible asset standards that both myself and Paco were very involved with. So the first thing we did was we restructured them. So we restructured them so they followed the order of the general standards to make it more logical. And as part of that order, we had to include new sections on data and inputs. So we talk about hierarchy of comparables, which I'll go through later. We had to include new sections on models, and we had to include additional ESG requirements. But if you can be patient with me, we're going to explore that in more detail in a while as we go through the asset standards. So at the moment, if we could just focus on questions in relation to the general standards, and then we will deal with the asset standards. At each asset standards, we're going to pause again, and we're going to give you time to ask us whatever questions you may have.
Thank you, Alex. Just a couple more questions I want to answer here. They're of a general nature, but not specific to the standards themselves. So one was a request regarding experience hours, whether these will be added directly, given as you join the webinar. The short answer I would like to say is yes. What I'll do is I'll need to speak with the membership department and the communication department to ensure that all attendees who were invited will automatically have their experience hours translated or carried across into their profiles within the Taqiyyim database. So the answer, like I said, I'd like to think is yes, but I'll get back to you more specifically on that. And then there was, let's see, there was a question on valuation models from Ferris. That's not too clear. The question reads literally that, is there any change of the valuation models? I'm not too clear on what you mean by that. If you could rephrase it, we'll attempt to answer it in the next round of questions. But as it relates to the IVS and the standards themselves, yes, there are sections that touch on valuation models, but there are no models embedded within the standards. So if you could clarify that, I'll try my best to get you an answer. Thank you, Alex. You can move on. Thanks.
Thank you. So we're now going to talk about business valuation and the intangible asset standards. And you'll notice that within IVS, there are 4 chapters that particularly relate to business valuation. And this is IVS 200, business and business interests, IVS 210, intangible assets, IVS 220, non-financial liabilities, and IVS 230, inventory. Now, the Business Valuation Board took a minimalist approach to modifications, and there are a number of reasons for this. The first one is they felt that their standards were very much fit for purpose and incorporated many of the parts that had been revised within IVS, but also they felt that they were at a critical stage of adoption and implementation across a number of markets, and therefore it wasn't helpful for them to have significant changes at this point in time. So most changes that have been made are to align the business standards with general standards. And the changes include things such as, in addition to these changes, the changes include clarification of perimeter and scope of valuation, i.e. looking at beneficial owner against the legal structure or controlling or non-controlling interest, clarification of required adjustments in income approach for business valuation, streamlining of the section on intangible asset economic life, and you can see the section streamlined in IVS 210, intangible assets section or para 100, to improve the methodological flexibility, and numerous edits are in preparation for future editions of IVS. Some of the expected changes for business valuation practice that they're looking at is further inclusion on ESG and clearer disclosures. And they've also been considering future topics for the business valuation agenda. So this would be for the forthcoming agenda consultation that we will be providing in the second half of this year. And these topics will include AVMs and artificial intelligence, basis of value, calibration, changes to complex structures and standards, cryptocurrency, link between intangible assets and ESG, reasonable range, valuations and stress markets, and valuation of startups, early stage business, and weighting of findings. So just to be clear, we issue an agenda consultation where we engage the market and we say, hey, these are the short, medium, and long-term priorities that the boards are looking at. What do you think? Do you think the prioritization is correct? Are there any topics that you think that we should be considering? So it goes all the way back to that beginning slide, the red one with the steps coming down, where we said the whole process starts with an agenda consultation. Now, standard setting is not a static process. Valuations evolve, standards evolve. We need to evolve to meet market needs. So even though we've just published the latest edition, we will be going to the market with our agenda consultation. And there's some other advances and controversies that the Business Valuation Board will be considering. The implementation of the International Sustainability Standards Board S1 and S2 on sustainability disclosures, looking at their impact on valuation, publicly listed v privately owned asset valuations. We've noticed that in some markets, there is a increasing gap between the market capitalization of assets listed on a stock exchange and the actual valuation of those assets. So we will be exploring that. Intangible assets under disclosures, there's several projects, including Singapore. Business valuation, we're looking at the impact of unstable inputs and intangible assets, things such as customer lifetime value, value of technology, value of data as an asset, and increasingly frequency of reference to valuation standards in a judicial setting. Often our valuations are used for litigation, and so we are exploring that avenue. Now, I'm now going to move to question and answers again. Now, be gentle with us. Remember that neither Paco or myself are business valuers. I have far more experience of business valuation than I thought I ever would have, and understand quite a bit. But if we don't know, we'll just be honest and say we will put that question to our board, and we will get you a response. So, Paco, over to you.
Okay. The question flow is not necessarily following the presentation flow. So what I'm trying to do is, given us I have 14, I may chuck some additional questions in there which are not intangible asset specific. But as I get intangible asset specific questions, I'll direct them towards you. So these questions were in Arabic. They have been translated on a higher level. I'm going to read them out in English. We can deal with those ones first, and then I'll deal with the English questions. First one says, peace be upon you. Regarding valuation reports and their types, some prospective clients are in a hurry to obtain a real estate valuation report for a specified purpose. Are there minimum components and contents of the valuation report that are required that will make it compliant with the international valuation standards?
Okay, so this is a good question, and it's actually quite a difficult question to answer. Not that all the questions we've received aren't good, and peace be upon all of you as well. But I won't say that for every question. My apologies, it would make the questions take longer. So we do have a section A to O that says what you need to put in your valuation report. But we recognize in all markets, particularly for mortgage lending, there may be specific pro formas that you have to use. And within those pro formas, there is sometimes variance between what we are requiring and what the pro forma is asking for. So actually, we see documentation and reporting as being together. So in those instances where you may have a pro forma that requires you to do something specific, you still need to have that information on your file and within your documentation. So I hope that clarifies it. I might hand over to Paco, who will be more aware of the particular pro formas that exist within the Kingdom of Saudi Arabia. So Paco, is there anything you want to add to that in terms of Taqeem?
I agree with your answer, Alex. Thanks. I just want to add a caveat to that. The bit that as a regulator, I'm a bit concerned about this, where it says the clients are in a hurry to obtain a real estate valuation report. So you basically want to do the bare minimum towards meeting the client requirement without being in conflict or being in breach of the IVS. I do get the very real commercial consideration where you want to satisfy your clients and you want to keep your client happy. But as Alex rightly pointed out, the IVS contains documentation or a fairly prescriptive list on what's required in a valuation report. So as long as you're meeting that, then you're in compliance with IVS. So that's the only caveat I want to add to that, that find that balance between satisfying your client's needs and being in breach of the IVS taqiyim regulations and the accredited valuers law. It's a tricky balance, yes, but just ensure you're in compliance when you're doing that. Yeah.
And speaking from personal experience, clients seem to have very short memories, don't they, Paco? So yes. I've had instances where they're in a rush, and you do everything to try and meet their needs, and then there's an issue with the valuation 2 to 3 years later, and they forget that they were in such a rush, and they're suddenly, why didn't you do this and this, and you find yourself in a difficult situation. So please do document it. A hurry is never a good excuse for doing half a job. At least that's what my wife tells me when it comes to cleaning the kitchen, but that's a totally separate matter. But at the end of the day, it's about the quality of valuation. It is your professionalism that is put online, not the client's. It is you who is at risk of litigation, not the client. So to a certain extent, a large part of our job does involve managing our clients' expectations. And if their expectations are unreasonable, I would suggest that either you tell them that or you turn down the instruction, because at the end of the day, you would be putting yourself at risk of litigation if you don't feel that it will enable you to give a proper quality evaluation. But go ahead, Paco.
No, great, Alex. What Alex said about the statutes of limitation and documentations, that's really important. I mean, Alex cited an example. I've had one where it was a electronics fabrication site, really huge campus with lots of clean rooms. They used to basically, so what they were doing, some of it included sensitive military type equipment, and they did not want us in those spaces. So we're not allowed to inspect. They gave us a floor area. We used that in our valuations. Fast forward 19 months later, almost 2 years later, when it came up for review and there was a challenge to it, the facilities manager had moved on to another job, and the person who barred us from inspection basically claimed amnesia and said, I do not remember saying you couldn't inspect that space, right? So it goes back to your documentation. Just make sure that asset valuer, your due diligence is tight. And if another competent valuer in your shoes would have done a better job, make sure that you're at least matching what he did, because that protects you from a risk and from a litigation standpoint. So yes, clients are important. They are why we're basically in business, right? We're providing valuation solutions to client problems, but in the process of solving a client problem, do not create a problem for yourself. Thank you. The next question relates to, well, we've been asked to give an example of governance, environmental, and social factors influencing the valuation and final conclusion of value. Alex, you want to take that?
Yes, no, it would be a joy for me to take that, and thank you very much for giving me that, Paco. So I'm going to actually go to the actual chapter, because I think that will be helpful to you. But remember that a lot of these factors can be market specific. So what we've done, you'll notice within IVS 104 appendices, is we've given examples of environmental, social, and governance factors. So I would urge you to actually look at the standard. And among the environmental ones, we talk about air and water pollution, biodiversity, climate change, current and future risks, clean water and sanitation, carbon and other gas emissions, deforestation, natural disaster, resource scarcity, or efficiency in waste management. But actually, the difficult ones for us, which we are currently considering at the moment, Paco, and we're also looking to do a perspective paper later this year on ESG and plant equipment and infrastructure, are the social and governance factors, because with many of them, they're still at a data gathering stage. But I'll give you examples of both. So social factors could be community relations, conflict, customer satisfaction, data protection and privacy, development of human capital, employee engagement, gender equality and racial equality, good health and well-being, working conditions, working environments. Examples of governance factors include, but are not limited to, audit committee structure, board diversity, structure, bribery and corruption, corporate governance, donations, ESG reporting standards and regulatory costs, executive remuneration, institutional strength, management succession planning, partnerships, political lobbying, rule of law, transparency, whistleblower schemes. Now, in the context of business valuation that we've just been talking about, governance is extremely important, because if a company is seen to have bad governance or not represent the public interest, and that is thought widely, what's the value of that business for? So we are looking at these. We do realize that these are very important parts. I would say refer to the standards where you'll see examples on each of these, but also recognize that, as we said, not everything is measurable. If you're doing with a business, employee retention, and we have done a number of perspective papers that I recommend you look at on workforce, on brand. We've got one coming out on data as well. But, you know, retaining your workforce and having a satisfied workforce can add value to your business. Using child labor would reduce your value massively to your business. So there are things that you can look at that are quite easy to understand, and other things that are slightly more intangible. So I would recommend that you look at our perspective paper series on intangible assets, and you will find further information in relation to that.
Thank you so much, Alex, for the expansion on that. Just want to add one point using a hybrid asset. So let's say data centers. Data centers will have a lot of building related structural stuff immovable. And in addition to that, they tend to be over-engineered with redundancies built in, a backup to the backup to the backup. So then that moves you towards a lot of machinery and equipment. If you're looking at evaluation of that and you're trying to consider ESG factors, just very high level, if there are, for the environmental considerations, you may be using mechanical and electrical services in that building, which are polluting or have a high carbon footprint. As it ties to governance, if there are government regulations in your jurisdiction or where you are operating that says certain aspects of heating, ventilation, air conditioning, mechanical and electrical has to be phased out by a certain date, that has a direct impact on value, because you know that your client or the occupier is going to have to do a significant retrofit to comply with the environmental and also that governance regulation or legislation. As that ties into the social, the pollutants have a direct impact on the social well-being of people who live in that area and who work in that space. In terms of your valuation models, just picking two approaches or methods within approaches. You're looking at a DCF, you can begin to factor in, based on the discount rates adopted at different stages, the risk that that entails, which will basically end up in you having a green premium or a brown discount to the value. If you're using, say, a cost approach, what I would say is usually in your cost approach, you tend to have obsolescence factors. There's a straight line depreciation bit, which is basically tied to age life. There's also what you'd call normally functional obsolescence, and then there's the external obsolescence type factors. What I would say is focus on the functional and the external obsolescence, because as you're doing your analysis, if you have segments within your cost approach or the cost model that you're working on, where you can begin to penalize for aspects of that building, which you know will be subject to change quite soon. And it is quite subjective, but you can look at the records, look at your external environment, etc. Your valuation by the time it's concluded would have factored in these defined risks, which are tied to governance, to the environmental, to the social, and to the governance. That's a very high level example, but I just wanted to make it a little bit more practical for you using an asset which cuts across the two broad tangible asset disciplines. So I hope that helps. Yeah. And
any more questions, Paco, at this point in time? Happy on the general standards, BV, but we'll deal with the tangible assets after we've talked through the tangible assets one.
There's one that's been translated. It's not totally clear. It says it's mandatory to add criteria to the valuation report. It's from Mohsen Al Sharif. I'm not too clear on what the question is asking, so you could rephrase it, or you could give it a shot.
Yeah, I think it's sort of referring back to what we need to include in the valuation report. So the previous section that we had. So when we look at it, within section 30.06, we do state that valuation reports must convey the following at a minimum. Yeah. But we also do state, that the format of valuation reports may range from comprehensive narrative reports to abbreviated summary reports. And we recognize that, but you still need the information within your documentation. And we also mention that standing engagements that require frequent or repeated valuations may provide updates to an existing IVS compliant report, providing it's agreed upon in the scope of work. But at the end of the day, the valuation report should include all the information necessary to provide the client with a clear description of the scope of work, the work performed, professional judgments made, and the basis of the conclusions reached. And valuation reports can reference other documents. So it may be that within your valuation report, you're referring to specific parts of your documentation. So I hope that answers that question. Is there any more that we want to deal with at this point in time?
Sure. I believe your answer captures aspects of Ahmed's question, which was a separate question from Ahmed Al-Sagaf. It says, in your opinion, will the purpose of valuation affect the sufficiency of documentation, for example, for strategic internal use? And I believe speaking about documentation and different types of reports pretty much answers that. The bit where I would say or expand on slightly in terms of internal uses, your valuation report, you're still liable for it. So if it's for internal use, provided you're working according to the IVS guidelines and you're documenting appropriately, that helps, which goes back to purpose of valuations. We see a lot of reports where it just says for internal purposes. It may be internal, but there is a clear purpose, right? So for what kind of decision making and what's the purpose? It helps to elaborate on that, because that also helps you to pick the appropriate basis of value and the supporting approaches and methods to the valuation. Thank you.
And just adding to what Paco said, because we had long discussions on this, it particularly comes up in financial instruments as well, where a lot of banks will have internal valuers. And I'm sure it happens in many places in the Kingdom of Saudi Arabia. But the best way to get around this is whether you're internal or not. So let's say you're internal. Imagine your firm is your client. And so you still have to do all the things that an external valuer would do. So it is no shortcut saying for internal use. In fact, in some ways, it makes things difficult because you've got to make sure that you don't have bias, you don't have conflicts of interest within your valuation, because these are the ethics that we're all under. So if you're ever not sure, just imagine that your firm that you work for is your client. And it's the same as getting an external instruction. It just might make it easier for you to access some of the information. And I think that would be a good way to think about it.
Thank you, Alex. Last question, because this relates more to the general and to the framework before we move deep into the asset standards. It's a question from Ferris. He asks, can you explain the IVS developed valuation framework? I know you touched on that in the beginning, so could you elaborate on that a little bit more, if that would be
Yeah,
helpful?
so previously, if you look at the IVS 2022, and I don't want to criticize myself because my role is also co-authoring, but the actual order of it didn't make sense. You notice that documentation and reporting was IVS 103, whereas it's the last thing that you actually do in a valuation process is to do your report. And so what we thought is we wanted to follow the natural order. So you start off with your scope of work. Once you've got your scope of work, you're looking at what basis of value. What is the intended use? Am I doing a market value? Am I doing a fair value? Am I doing a liquidation value? Then, though there is interconnectivities between basis of value and valuation approaches, you begin to look at how am I going to deal with this? Am I going to use a cost approach, an income approach, a market approach? Then from there, you would begin thinking about, well, what's the data for that? What data do I have available? Where's the comparable or other evidence that I need in relation to that valuation? And what model am I going to use at the end of the day? And then you would look towards your documentation and reporting. Now, the only clarification that is needed here is while doing this process with the general standards, you also need to refer to the tangible asset standards or whichever standards of the asset that you're valuing, because there may be asset-specific requirements that you need to follow. So what we really mean is that we've restructured the standards so they naturally follow the process that a valuer does during the course of their work. So we don't suddenly have reporting in the middle of our standards and let's say basis of value and valuation approaches at the end. So we looked at the order, we thought this order didn't make sense. And then we did, believe it or not, have in-depth discussions across all our boards. So that's the Standards Review Board, Business Valuation Board, Financial Instruments Board, and Tangible Assets to say, do we actually follow the same process? And after a lot of discussions, and Paco, you'll probably remember these, we agreed that we did all follow the same process. Some of us may use slightly different methodology, but that structure, that development, that process is the same across all. So I hope that answers your question. My apologies if my previous explanation did not give you sufficient clarity, but hopefully it now does. If it doesn't, just pop the question back in again and we will try and clarify it further when we finish the tangible assets section, because we will have a Q&A after that, a Q&A after the financial instruments, and then we have our last few slides which are on implementation and future topics, and we will again give you the opportunity for Q&A. So please don't worry, you've got plenty of opportunity for questions, and both Paco and myself will make ourselves available for whatever questions you need. So any more for the moment, Paco, that we should deal with?
No, I'll pause there. We have 25 more in the queue and it's building up. But what I would say is, given the long pause to answer questions, let's continue with the presentation and we'll take more questions at the next natural pause. Yeah.
Brilliant. I'm slightly more optimistic than you because my screen's going 24, but that's a separate matter. So tangible assets. So this is the one that Paco is a member of the Tangible Assets Board, so he very much participates within the tangible assets and was very much part of the revisions to the tangible asset standards as well. So first of all, I just want to go through what the tangible asset standards are. So there are 3 chapters here: plant, equipment and infrastructure, real property interest, and development property. Now, some of you may come back to us and say, I do gems and jewelry. What is the relevant standard for that? You don't seem to have a specific standard within the tangible asset standard. And that's where I want to reiterate the point that the general standards apply to everything, whatever you are doing. But what we've tried to do is where we think there are variances, so where we think there's something slightly different in the way that you look at it, we've got additional chapters. Real property interest includes land, so land would be under that. Also, to a certain extent, development property. And as both Paco and myself would tell you from our work experience, often we would work together. If I'm doing a factory, I might be doing the land and the buildings, and Paco would be doing all the plant and equipment. So you need to refer to these chapters for very much for your tangible assets valuation. But if you are coming up with something that you think should be there, there's two ways to deal with it. One, refer to the general standards. Two, we have our agenda consultation coming out later this year. If you feel there's something missing within the tangible asset standards, tell us. We'll consider it as a board, and if necessary, we will make revisions to IVS to deal with it, or we may do a perspective paper, such as we previously did a perspective paper on the valuation of biological assets. So you will find further information there. So when looking at the tangible asset standards, the first thing we did, and this partly answers the question we were asked earlier as well, is we made consequential amendments in line with revisions to the general standards. So we made revisions to the section that deals with inspection that I'll go into later, data and inputs, valuation models, ESG and documentation. Now, the other thing is that IVS 300 always implicitly included infrastructure, but we felt additional clarification was needed. So we've retitled this chapter Plant, Equipment and Infrastructure, and we now explicitly include references to it within the standard. And also, if any of you are looking for the previous IVS 102, apart from looking at the red line version, you will notice that the section that's dealt with scope of work, so sufficient investigations, which I will go through in a while, is now being included in all the tangible assets chapters. And here is exactly the bit that I was referring to. So it's almost like I predicted myself, but you can see here our revisions on inspection. So what we've done is we've moved this. Now, sufficient investigations and evidence must be assembled by means such as inspection, inquiry, research, computation, or analysis to ensure the valuation is properly supported. When determining the extent of investigations and evidence necessary, professional judgment is required to ensure it is fit for the purpose of the valuation. Now, I'm going to wander a little bit outside this slide just to mention the fact that inspection is very much a key issue that's being discussed by the Tangible Assets Board. In some markets, they've mandated inspections for all assets. In other markets, inspections are not mandated. We do have a working group. We will be issuing a perspective paper on inspections later this year, where we will highlight some of the issues. Now, we believe that unlike local governments, we can't mandate inspections for everything. For example, imagine if you were doing a car rental firm with 300,000 cars. You are not going to visit every one of those cars as part of your valuation. In fact, if you did, your client would probably have to wait 10 years for the valuation. If you're doing oil or gas pipelines, you would not be able to walk along all the line. Also, arguably, with something such as land, when you're dealing with a lot of acres of land, it may be more appropriate to use drone technology to view all of your land than it would be to actually walk around thousands of hectares. So we are looking at this, we are reviewing this. As I said, standard setting is never a static process. Standards evolve. We believe that we're in the right place now, but if you're not sure whether you should inspect, your professional judgment is required. At the end of the day, what we're trying to do is produce a valuation fit for purpose. Now, I might pause here a second, Paco, and hand over to you, just in case there's anything specific in relation to the Kingdom of Saudi Arabia's requirements with inspection that I need to add.
Broadly, I'll say the answer is yes. Currently, as it stands, you need to inspect each and every asset. What's going to happen is, given as the kingdom's valuations are anchored to the IVS, and we're working on that working group on inspections, of which I'm a part of. My view is that based on the outcomes of that inspection working group perspective paper and what the conclusions are, we may need to update it as it relates to Taqeem, because like you rightly pointed out, there are some practical cases in which inspections may be a challenge. Yeah, you talked about pipelines running across countries, fleets of vehicles, aircrafts, which a significant percentage are usually in the air, right? Like assets versus discrete assets, etc. So I'll hold it for now on that instead of giving an authoritative answer. Coming out of the working group and what IVS issues, we may need to revisit that. But for now, inspections are mandatory. Thanks.
Brilliant. And I'll just add a little bit more for clarification. We also need to look at what an inspection means. In some markets, driving by a car for 20 in a car past an asset and recording it on your GPS does not constitute an inspection. You know, to a certain extent, an inspection might also include inspecting the locality. You know, getting an idea of where your valuation is taking place. You may inspect some of the comparables. So we also need to explore the depth of the inspection and what it means. And we're also considering whether there are certain levels that are on the, in terms of the instruction. So I'm probably going into too much detail here, but it does give you an idea of some of the challenges we face in standard setting and some of the issues that need to be reviewed by the board when you're looking at an overarching principle-based international standard. So just the easiest way to say it is watch this space. Further information will come. Now, data and inputs. In addition to the requirements contained within IVS 104 data and inputs, there's the following hierarchy of comparable evidence which should be followed. Direct comparable evidence, indirect comparable evidence, general market data, and other sources. Now, this is as far as we felt we could go for a principle-based standard, and we say when applying the hierarchy of comparable evidence, the valuer must ensure that the characteristics of suitable and data and inputs contained within IVS 104 are fully applied. The inputs must be consistent with the models being used to value the asset or liability, and the selection, source, and use of inputs must be explained, justified, and documented, and any significant ESG factors associated with the value of an asset should be considered as part of the data and input selection process. Now, I'm aware that many of our member organizations may provide more detailed requirements in relation to comparable evidence where they actually go through intrinsic detail level. So obviously under IVS, you would also need to comply with those as well. You'll also notice that within the tangible assets chapters, we've added a section on valuation models, and in accordance with IVS 105 valuation models, the valuer must maximize as many of the characteristics of suitable valuation models as possible. And valuation models must be suitable for the intended use of the valuation and consistent with suitable inputs. And the reason why we say this is don't just assume because someone else in your office is using an Excel model that it will be good for your purposes. Often, models can be specifically designed for their instruction, and therefore it's very important that you ensure that that model is suitable for the intended use of the valuation and consistent with suitable inputs. And just a few more bits to go before we get to the question and answers. So we were asked by a number of people to provide more information in relation to ESG and tangible assets valuation as part of the consultation process. We have included some more explicit ESG considerations in the tangible asset standards, but us and everyone else is still working on data challenges in relation to ESG and how to quantify it. So please refer to our perspective papers. This is an ongoing piece of work, but within your scope of work, the responsibility for the identification of actual or potential environmental factors and that the property is free from contamination or other environmental risks. Now, in scope of work, it's a little bit like, in a way, the question of the gentleman who was being asked to give a quick valuation by his client. At the end of the day, you are the professional advisor. Not everything we're asked to do in relation to ESG is possible at this point in time. So there may need to be an element of education. So within your scope of work, be very clear about what you're doing and what you're not doing. And in your report, check that it's the same. Be very clear about what you have done and that it's met what you were asked to in the scope of work. And then under data, significant ESG factors associated with the valuation of an asset, with the value of an asset, should be considered as part of the data and input selection process. So we mentioned earlier, talking through the general standards, the characteristics of data. You should look at those characteristics when considering ESG to make sure that you have the best data available. Now, moving to documentation and reporting, reports must be issued for evaluation. They must also include comment on the effect on the reported value of any associated tangible or intangible assets excluded. On the whole, we don't value intangible assets. That's why we're called tangible asset valuers. But if you do move across to value intangible, the correct chapter to refer to is IVS 210, intangible assets. And within, if it is a valuation review report, you do need to state whether it is a valuation process review or a value review, and I clarified the difference between those two. Just moving forward, future topics. So this is going to be where we're meeting at the end of this month, the Tangible Assets Board. It's actually a physical meeting. And one of the things we're going to be looking at is potential future topics. So you can see here, agricultural and plantation land, biological assets, compulsory purchase, expropriation, compensation, unregistered land. Compulsory purchase, I think you refer to as eminent domain valuations, and you have a manual in relation to that. Insurance valuations, private and public markets, prudential value, quality control and the individual valuer, inspections and investigations, which we've already mentioned that we're looking at, valuation risk and valuations in the volatile market and reasonable range, and valuation reviews, appeals, and external audit. So these are some of the topics that we'll be discussing with a view to future standard setting. But I'll now move to the questions again. So over to you, Paco, and let's take on board any questions.
Thank you, Alex. I inadvertently closed one question, which I was going to answer live. So for that question first, the question was in and around the statute of limitations, or how long a valuer is required to hold a valuation report for. The answer for that for Taqeem is 10 years. So you're supposed to archive documents and hold information on your valuation for 10 years, during which you're liable for the work you did. Yeah. So that answers that question. The next question is, and in part you've answered it already, Alex. So this is from Ferris. It says, are the new updates for restructuring the other new updates for restructuring the IVS, or there was some major updates on each standard?
So I mean, we have no plans to restructure IVS. That's the first thing. Please, everyone, this was a reasonable change within the standard. We've got the structure right. We've got no plans to restructure it, but there will always be future additions and revisions to the standards. We've moved to a 3-yearly cycle now. Normally what we'll do is we'll issue prospective papers first to engage the market or discuss a market issue. Valuation and standard setting is not simple, and so there is a process that we follow, and we will do revisions within the next edition of IVS in 3 years' time, probably. The other bit that we do sometimes do is if we get a comment that something is not clearly understood or open to misinterpretation, we can always publish technical clarifications. So there may be revisions in relation to that, but no, we're not looking to do any further structural or other revisions at this point in time.
Okay, so basically, as it stands, there's no major restructuring planned. As the standards currently are, in terms of that reorganization and updating, a lot of that relates to the general standards and anything that could be considered general. And the order of them, 101 to 106, have changed some. So they are not, so what used to be 103 is not necessarily 103 any longer. So that's what's changed. As relates to the asset standards, broadly speaking, each one has been touched in some way, shape, or form, some more majorly than others. But because of that reorganization, a lot of content has been moved to appendices or into the general standards as they cut across all types of valuations. So Alex helpfully referred you to the red line version, which is also publicly available. If you compare the black line or the official version with the red line version, you will see what's changed, and it's easier to track it as relates specifically to the asset standard of interest which you want to work on or which guides your practice. Yeah, thanks. One more question, actually a couple more questions before we move on. This is an interesting one. Is there a plan to unify the exams related to the valuation profession so that a person can take one set of exams to be qualified?
I'll start and then you jump in. I'll put my foot in it and you can sort me out, Packer. So we don't actually deal with competence and professional qualifications ourselves. They're done by member organisations such as Taqiim and others. So the valuation standards is under the assumption that you are a competent valuer. In terms of standard setting, we are always looking at harmonisation. Now, separately from that, and Packer will come into detail here, but I know Taqiim have, I don't know what I'd call it, MOUs with other valuation professional organisations where you may recognise each other's standards. In some cases, you would need to do maybe a separate exam or whatever to get that qualification. But if you think you've got difficulties, imagine being in America where under US PAT, your licensing varies on a state-by-state basis. So you couldn't actually get licensed for all of America. You would have to get licensed for a particular state, and each state may have its own set of exams. And I think every 2 to 3 years, they need to redo their exams to just show that they still have their abilities. But we're always looking at clarification. We're always looking at harmonisation, but Packer will be able to advise you further on that.
Alex's answer pretty much sums it up. I think where the distinctions come in and the challenges come in towards unification, where you look at the requirements for different jurisdictions. We touched on some of that when we talked about local law and legislation, and not departing from those ones, basically. Sorry, I used the word departures, Alex. I know we said we wouldn't use that anymore here. But so that's it, right? But Takim has tie-ins with different valuation professional organizations. For real estate, there's a mutual designation with RICS. For the ASA, as it relates to machinery and equipment and infrastructure, there is a mutual designation, and we have tie-ins with IIBV for business valuations. ASA also has tie-ins, which are planned to be extended further at some point for the new sector, which is gems and precious stones. So we're constantly working to find ways to extend your Taki membership depending on where you practice and the certifications you require to other jurisdictions. But given as there's local law, local practice, a standardized exam, I don't think it's going to be easy to get to that point where you have one universal exam across the world for valuation qualifications, because there are distinctions and there are peculiarities to each and every market. I hope that answers your question.
And just adding to what Paco said, look at other professions, medicine. There's not one exam for everyone. Look at accountancy, and it's all because each country will have their own specific requirements. But both of us work very much towards harmonization, and where we can harmonize things or make it easier. And probably the first step that is the recognition of the qualification within your country. And then Takim has really advanced in this over the years, as shown by its agreement with other organisations. But the good bit is the skills required will be pretty much the same. So, except for having to learn the local laws within that jurisdiction, the exam should not be too much of a burden for you.
Thanks, Alex. Just one bit on that. So, for instance, you look at the American Society of Appraisers, right? Alex talked about state requirements for certification and their reaccreditation process. The ASA makes allowance that once you are certified and qualified under as an accredited senior appraiser, when you're working outside of the United States, you are guided by the IVS, right? So these standards we're talking about is what applies to practitioners who are no longer practicing directly in the US. So in my case, since 2009 with an ASA, I've been practicing where it's ASA required using the IVS because that's seen as, well, the overarching regulations. So another reason to be familiar with the standards, because it has an international reach, and as much as it's not totally unified yet in terms of the exams, etc. There's a question, Alex, this one is loaded.
Okay.
It says, what does it mean in terms of the level of appropriate valuation risk given? Intended use, intended user, the characteristics of the asset or liability being valued. Is it a percentage on each one? I'm not sure I fully get it, but yeah, like I said, it's loaded. But
okay, so
yeah.
let me answer this. I'll answer it quickly and then I'll go into slightly more detail. So first of all, I'm going to go through a few definitions with you. The first one is, you'll notice within the standard we have a definition of valuation risk, the possibility that the valuer is not appropriate for its intended use. Now, within those, I'd like to point to two bits that I think are very important. Well, three bits in terms of valuation risk. So I would like to point to you to our definition of significant, because often we talk about things that are significant within the valuation, and that is any aspect of the valuation which, in the professional judgment of the valuer, greatly impacts the resultant value. I would also like to point them towards our definition of professional judgment, because we've used that word a lot. What does it actually mean? The use of accumulated knowledge and experience, as well as critical reasoning to make an informed decision. And I'd also like to point to you towards professional skepticism, because we should use that at all times. And that is an attitude that includes a questioning mind and critical assessment of valuation evidence. Now, one of the things to notice is that IVS very much deals with valuation process risk. So if you follow the process within IVS, you should hopefully be eliminating that side of risk. But there's other risks. Certain assets are inherently risky. For example, an early stage company valuation, where a lot of them don't seem to survive. So what we are doing is we do have a working group that is going to go into further depth and look at the different types of valuation risk, the difference between valuation risk and uncertainty, and how we can develop that. The other point that I would say is one of the wonderful and difficult things about our business is no asset or liability is ever the same. There's always differences within them. So a percentage methodology would never work, because you have to consider the unique characteristics of each asset and liability. So yes, as a valuer, I'd love it if you just say whack in 10% and this deals with it. But no, that is not the way we look at it. In terms of the characteristics, there is no characteristic that is more relevant. You need to weight that according to your instruction, the intended use, etc. But obviously, in terms of looking at data, observant and relevant data is overarching. Then you look at those other characteristics and you try and maximize them as much as possible. So hopefully that answers the question, Becca.
Yeah, that answers it perfectly, Alex. Thanks for that. There's an anonymous attendee who says they would like to talk with me if possible. What I would say is send communication through to Takim's communication department, and then we can talk. I don't know what you want to talk about, so unfortunately I cannot answer it in this session. So send an email or reach out to Takim's front desk, and then we can talk. Yeah, thank you.
Well, let's hope you're not in their bad books and the conversation goes successfully.
I hope so. I may give you feedback depending on the nature of the conversation. Yeah. There's another one. I think we've captured that as relates to ESG and how it affects the reports. They want an example. I think you talked about it broadly speaking from the considerations, and I tried to give an example which cuts across tangible assets, building services, machinery and equipment, and real estate. So I think we've answered that.
I mean, the only thing I'd add, Pascal, is don't be frightened. E is bread and butter to us. We've been doing it all the time. It's not a new concept within any tangible assets valuation. So probably your team members are very aware of the environmental aspects that they've got to consider in relation to their valuation. Social and governance, developmental stage, still in data gathering exercise, not always practical, but just be explicit with your client in your scope of work about what you can do and what you can't do. In business valuation, it gets slightly grayer because we talk about workforce retention, brand, and other matters that may come into it. But other than that, I think there's nothing for them to worry about in relation to it at this stage. It's developmental. You know very well how to deal with BE because you've been doing that for a long time. And S&G, use your professional judgment.
Thank you, Alex. That helps, yeah. Let's see. All right, I had the same question come through 3 times. That's the one on valuation risk. So I'm skipping all 3 because we've answered that. And thank you, Simfiwe, on your comments here. We're glad we're able to give you examples to make it more concrete for you. There's a question on standards, right? It says, are the standards mandatory and applied in the United States, the EU, and the UK?
Well, that is a very good question. I would say that a lot of them are mandatory through our member organizations. For example, if I have a look at the RICS, which you may know, the international valuation standards are incorporated within the Red Book guidance that's offered in relation to valuation. Within the US, they are recommended. I think Paco gave you the example of ASA, and with ASA, when he is working internationally, they recommend that you use international valuation standards. Within Europe, they're widely adopted as well. Our members include organizations such as FTSE, etc. At the end of the day, I would see no reason not to use them. You know, they're overarching principle based and they're a sign of quality. But if you're not sure within a specific market, then I suggest that you go to that market, because the world is a big place. Different organizations have different requirements. I'm aware with some markets, they have 18 competing valuation professional organizations all within that one market. I won't mention names, but you need to have a look at the requirements of the market. But one of the questions we often get asked, which I'm going to answer in relation to your question, is how can I comply with IVS and often it's IFRS or other standards? And my answer would be, well, because we're overarching and principle based, it's very easy to comply with both. So my question would almost be returning the question to you, why would you not comply with IVS when valuing in USA, Europe, UK, etc.? If it is a mark of quality, if it reduces valuation risk, if it gives you that insurance, and if it can integrate with other standards, I would actually turn that question on its head. Hope that helps.
Thank you, Alex. Do we have time for 2 more questions before we move to the next segment, or you want to continue and then I'll hold fire for now?
No, I'm happy to answer as many questions as possible.
Okay, thank you. There's a question from Ferris. It's RICS related, Red Book related. That's a quick answer, so I can give you an answer to that. It says, is the Red Book, or will the Red Book be updated with IVS 2025? The answer is yes, and I know this because I'm on the Valuation Professional Group panel, and that is in the works. So yes, it will be updated to reflect the new IVS. The second question, Alex, a bit of a loaded one. So it's from Ademola. It's a long one. I have a company that we work for where the internal valuation reviewer recently insisted that we only use the income method or the income approach for real estate assets that generate income. I countered him by saying, or by using the IVS that clearly states that no single method is ideal for all valuations. How else can you also counter this notion? I have seen properties that are underutilized, that capitalize the rents, that capitalizing the rents would give a lower value, where the cost of land is more than the value arrived at using the income method. So fairly loaded one.
So the first thing I'm going to say, and I know this is not very popular among people, is you can always refuse an instruction. At the end of the day, it's your liability, your professionalism that is online, not that of the client. But I'm also aware of the economic reality as well. So to me, where there is an element of risk, whether there's an element of uncertainty, you should always be using more than one valuation approach. And to be honest with you, not wanting to advertise any products here, so forgive me, but when I was younger, there was a Swiss Army knife. It probably still exists, and you had everything from a saw to a magnifying glass, etc. I often see valuation approaches as a bit like our Swiss Army knife. You know, even if I have a main approach, I may use other approaches to cross-reference and check. Now, it seems to me from what you're saying is that the client is favoring a certain approach because he thinks it will give them a higher valuation. That makes me concerned that the valuation that you would be providing under those circumstances would not be correct. So you could always point to IVS, and also I would believe to Taqiyim, and Paco can probably give you the relevant section within the manuals. But at the end of the day, you're there to do a quality job and to provide a valuation that is accurate, that minimizes the risk, minimizes the uncertainty. And therefore, in this case, I would respond to the client and say that I don't believe that using the income approach only, specifically as a number of these buildings are A, vacant, you know, so you don't even know whether that income is sustainable, you know, and B, you know, there may be issues in relation to some of the income not being received, that this is in fact the only approach that I can use for this valuation. In fact, it runs the risk that to some extent I may be exaggerating the number reported. Now, at the end of the day, whatever approach we use, we should hopefully come to pretty much the same or similar figures. But I would think that this is definitely a situation where you need to look at the market approach as well, see how the market treats the valuation through comparables of unoccupied buildings, even those that do rent. So I'm always a fan of checking and double checking what we do. And please don't be afraid to say to the client, no, I cannot do this. I am a valuer. I am a professional. You've instructed me for my professional advice, and under Taqeem guidelines or under IVS, I would not be able to do an instruction on this basis. I don't know if there's any more you want to add to that, Pekka.
No, that's an all-encompassing answer. It's a really good answer. Thanks. Can we move on with the rest of the slides till we get to the next pause? And guys, we will get to your questions here. So just have patience and let's continue through with the rest of the presentation. Thank you.
Okay, I'm now going to talk you through financial instruments. I'm not going to go into great detail on these slides. I'll try and move relatively quickly, and then I will ignore the final financial instruments Q&A and move to the last few slides, so then we can end up just dealing with all your questions. But let's talk a little bit about financial instrument standard revision. So I think that this is the chapter within the asset standards that has been most specifically revised, yeah? And it addresses the need across broad types of valuations, developed and developing markets, all sizes of firms throughout the world, level 1, level 2, and level 3 securities, single financial instrument through to portfolios, one-time and ongoing valuations and financial instruments. Valuations can be done daily, and there's additional requirements for data and inputs, valuation models, valuation process controls and review and challenge, and for governance. Now, when we're looking at the quality of financial instrument valuations, and to be honest, it's not that different from any other asset classes, because you're looking at consistency and comparability. You're looking at the processes and controls around selection and usage of data and inputs, model selection and usage, assessment of valuation risk, execution of the valuation. Now, these apply to whatever we're doing. And then the processes when an organization uses specialists and service organizations, they've got to document the nature of the work to be performed by the specialist or service organization. They've got to determine that these parties perform their specific procedures in a manner that's consistent with IVS, or perform incremental procedures to comply with IVS. And they look at the reliability, so they define and set minimum competencies and processes required in evaluation, quality control processes, valuation execution, roles and responsibilities, review and challenge, assessment of valuation risk, transparency, and documentation. And looking at their next steps, there's a number of things that they'll be looking at in the future. They're going to be looking at the issue of providing application guidance. Now, I'd say that this is unique to FI. We're not looking to do application guidance ourselves, because application guidance is provided by other organizations, such as Taqeem, who are our members. They would give you application guidance. But within financial instruments, they have the situation where there aren't really any valuation professional organisations who are a particular route to qualification, and therefore they feel that additional application guidance may be necessary. And this is something that we'll be discussing at the Standards Review Board over towards the end of this month. They're also looking at professionalism, and this is related to the fact that you may be a PhD in maths who comes into financial instruments and is trained in-house. And so it's understanding what is that actual competence, which is easier for us in the worlds of tangible assets and business valuation. They'll also, like us, be looking at ESG, valuation risk, AVMs, and artificial intelligence. So I'm going to ignore those question and answers. Please don't panic. All the rest of the session will now be questions and answers. But I just wanted to talk about some of the implementation considerations. So when we were implementing it, what we were really looking at is the relationship between the valuer, the client, and the user. You have to think about internal and external valuation specialists and service organizations. How do we use them? We are responsible for their work. Also, valuation process controls and review and challenge. All valuations should have a degree of review and challenge. So you need to look at the execution. You need to look at the results. You may choose to do some sensitivity analysis, checking what happens if your yields vary by 10 basis points, or if you've got different market rents, etc. And it's very important to document the processes and show your professional judgment. Please remember, these are very much your defense in relation to valuation. So I'd like to just very briefly touch on next steps and possible future topics. So we had a question on valuation risk. You can see that I haven't made this slide up before answering this question. We are looking to clarify valuation risk and look at additional requirements for valuation uncertainty and proportionality. We want to expand the requirements for sustainability and ESG, but we're also in a data gathering exercise. We're going to consider the impact of new technology on valuation, including artificial intelligence, such as ChatGPT, which I understand writes a lot of the location in the valuation reports these days, smart contracts, blockchains, and we're also expanding to look at new types of assets, such as digital assets. So first of all, I want you to thank you for staying with both of us this long. I've never got my wife to listen to me more than 5 minutes, so I think 2 hours would really be too much for her. So very appreciative of all your time, and we hope you found the presentation helpful. As mentioned by Paco, we will be looking to do a future presentation where there will be Arabic translation as well, probably later in the year. If you scan the QR code, you can get a copy of this presentation. It will also direct you to the pages where you can get IVS. So I'll hand over to Paco, and let's try and answer your remaining questions, and thank you.
Thank you, Alex. Really good presentation. Just a quick one, right? Before we move to the specific questions, I noticed that there were questions that pertain specifically to business valuations and intangible assets. We'll try to answer some of those ones, and where it is relatively technical or requires additional input in terms of the answers, what we would do is we're taking feedback from this current presentation. Like I said, there will be an update presentation on the IVS standards as they've been updated in Q2 of this year. During that presentation, what we're going to do is, based on feedback, expand certain sections and also look to have a panelist who is focused on intangible assets valuations and potentially on financial instruments. Based on that, we can give you more detailed answers to the business valuations and FI specific questions. Alex, I will still check out a couple of those questions out, and if we can tackle them fully, that's fine. But that's an area for expansion in our next presentation when the IVS is fully translated into Arabic 1, and also once the slides have been expanded to capture the feedback. The first question is, are there any additions or modifications to the foundations of value or assumptions? especially coercion and liquidation, and expropriation. This is a direct translation, literally from the Arabic to English, so I may be missing something in here. But as relates to additions or modifications to the basis of value and the assumptions, Alex, if you could tackle
Yeah,
that.
so what I'd say is liquidation value, yes. Please look at the specific questions. PACA will be aware that it's a tangible assets board. We spend a lot of time looking at liquidation value. We needed to recognize that in some cases it may be better, particularly for plant and equipment, when you're dealing with a production line, to maybe sell the asset as a whole when looking at liquidation value, whereas in other cases, a piecemeal valuation would produce you a higher figure and would be the better one to use for liquidation value. So in relation to that, and also to encourage you to have a look, yes, there are some changes within that. You'll also notice that within plant equipment and infrastructure, IVS 300, without diverting, is we've provided slightly more detail in relation to the income approach and also in relation to the market approach, because valuation moves on. Previously, it seemed to be all cost approach, cost approach, cost approach, didn't it, Paco? And there are very much circumstances when valuing plant equipment and infrastructure where the market and income approach may be relevant. So we try to expand those sections. So have a look. Yes, there have been some clarifications in relation to that. In terms of eminent domain valuation, that's not an area we really get into at the moment. It's one that's going to be discussed by the Tangible Assets Board in our meeting. But one of the issues is each country will have its own specific requirements in relation to what expropriation valuers need to do. So what we really need to do is look at some of that and say, is there anything specific that we can say as an overarching principle-based standard in relation to expropriation value, other than you've got to obey the laws of the country in which you're doing it and follow it? And I know that, for example, in the UK, though they may start off to some extent with market value, there's very specific requirements in relation to how it is calculated, from what date it is calculated. There's even specific discussions in relation to blight, because often you may feel that your property is blighted before the actual development plan is actually put into action, or it receives the planning permission. So you may say this may already have had some effect on the value. So it's a highly complicated area. It's one that we're really going to take time to discuss at the Tangible Assets Board. But no, we do not go to that level within IVS at the moment, though we may consider doing a perspective paper on it in the future.
Thank you, Alex. Just to expand on the expropriation bit from a Taqiyim standpoint, as some of the audience may be aware, Taqiyim has an expropriation manual and also has a specific exam for expropriation or compulsory purchase. The law as relates to compulsory purchase is being updated in the kingdom currently. And tied to that, the manual will also be updated to reflect the outcomes of the new law. So watch the space once again. In terms of practice in the Kingdom of Saudi Arabia, these updates are in play, and once they are fully realized, we will have a new manual. We'll have new guidance on that. So that's just a little on expropriation. Yeah, thanks. Alex, a couple of business valuation specific questions. Fairly broad brush, but will require detailed answers. I'll check them out there. We can take a stab at them, or we can park them and tackle business valuation related questions once we have a panelist on board to do that. The first one is it possible to value any asset based on its goodwill without the client's request to do so?
Okay, I'm going to answer this two ways. First of all, you do have your scope of work. Your scope of work should state what you are valuing and what you are not looking. I'm aware that within business valuation, there can be elements of goodwill in it. What I would do is direct you to 3 perspective papers that we have published on goodwill, which look at incorporating goodwill within a business valuation. I believe we moved away from a straight line amortization of goodwill, and I believe that the further to discussions, the accounting standards boards seem to have moved in a similar direction, but I'm also aware that this is a complicated area. So I think the best thing that you could do in relation to goodwill, and Packout can make them available to you, and Packout, if you don't have access to you, I'll send them to you. But there are 3 perspective papers on goodwill that we've issued, and they will give you further detail than what is contained within the standard. There are also detailed requirements within IVS 200 in relation, and in IVS 210 in relation to goodwill. So I suggest that if you just do a word search with that, it will take you to the relevant sections as well.
Thank you, Alex. One more, non-financial obligations. Has their structure been changed radically, or has the modification been simple?
I believe that the modification has been simple. I'm aware of the changes that have made to the business valuation standards, so the structure has not been changed radically.
Thank you. So these were Arabic questions translated. I'm going to move through a few of the English questions, and then once we're done with those, I'll come back to Arabic questions. Will there be a certificate in IVS, like a diploma in IFRS from the ACCA?
No, we don't do certification. It's supplied by our members and being members of that organization. So no, that is not something that we're looking to do.
Great. Is there a plan to develop a specialized valuation for agricultural projects, especially livestock and crops and fish farming? This was interesting, Alex, because it came up in our meetings the last time around. So is there a plan?
So we're looking at our agenda consultation, and we're looking at our short, medium and long-term topics, 2 to 4 and 6 years. And this is a question we've been asking at tangible asset level at the board. We are aware that our member organisations, if you're looking for standards, will provide you specific guidance in relation to dealing with cattle, livestock and farming. And to a large extent, it is integrated within IVS 400. But I think this is very much an open question for us. One of the things we have to look at is what is different about the way that you value it. And I could even use a palm tree example where almost the trees for accounting are valued different from the product, the palm oil that comes out of them, and there's a different life cycle, etc. So it seems that you're privy to some of the discussions we're having, or we seem to be discussing the same topic. So what I can tell you is we will be exploring these issues over the next few weeks, and there may be something within our agenda consultation in relation to this. We are aware that there are some differences in the way that you need to look at it, expected lifespan and other things. So this will be a topic for consideration by the Tangible Assets Board.
Thank you, Alex. A very specific question from Ademola. Please advise, as of today, the 14th of February, 2024, which valuation standard should we quote between 2022 version and the 2025 version? As the latest valuation standards say, effective 2025, can we start adopting right away? Yeah.
We encourage early adoption, and our point of view is if the standard is better and provides a better quality of valuation, why would you not adopt it? So what are the reasons for the delay? Well, one of the reasons is in many markets, we need the standard translated. This takes time, the actual translation process. Another reason could be if you're within a firm or within an organization, they need to update and revise not only their own standards, but in some cases their requirements within their firm and their quality control, etc., in order to meet the requirements or the additional requirements within IVS. So at the end of the day, you need to be very clear about what you're doing. We're at this sort of grey period at the moment where you could use the current edition, you could adopt the latest edition. And so within your scope of work, within your reporting, please be clear about what edition of IVS you're using. It shouldn't, I mean, I was asked this question, would it produce a different value? You know, and my answer was no, not if it's done by a competent valuer. However, if it's not done by a competent valuer, it would highlight under the latest editions of IVS the inadequacies and inconsistencies within their valuation. And in these instances, it could affect a valuer. So providing a competent valuer, it's not going to affect your value. It's just going to be make that you clear about the processes and there's more transparency and consistency. So please use the latest one, but please be clear about which edition that you're using.
Thank you, Alex. As it relates to Saudi, what I'll say is if your primary working language is Arabic, given as the official Arabic translation is not yet ready, what I would say is you can hold off work under the 2022 version of the IVS, and once the translation is completed and you're familiar with it, you can start using it to work. Compulsory adoption date, that's the 31st of January 2025. So there's some time between now and then for the translation to be sorted out and for you to get familiar with it. And I would rather practitioners are familiar with the standards before they fully adopt them and integrate them into their evaluations. So Taqiim is working hard to get that official Arabic translation to the finish line, and that's going to cascade through a lot of other things Taqiim is working on in terms of our curricula, in terms of our technical guidance manuals, etc. Everything will be updated to reflect the new IVS effective 2025. But for now, until all the Arabic inputs are ready, you can continue to work with the current version of the IVS 2022, as you call it. Thanks. Alex, is there a standard for selecting the level for multipliers? Example, revenue or EBIT or net, etc.?
No, as I said, we're overarching principle based. We don't give technical guidance as such. There will be principles, such as I would refer to our principles of data in IVS 104 when you're looking at selecting your multiples and EBITDA, to check, first of all, that it's observable and relevant data, and then to actually look down as the characteristics and investigate the data and check that that data is fit for purpose. But no, that's not something that we would supply. There may be organizations and people who do supply that, but it wouldn't be the role of an overarching principle-based standard set.
Thanks, Alex. And just to support that, what Alex said about the IVS being overarching, as relates to Taqiim and Taqiim members, once again, every sector or practice sector for valuations has a technical guidance manual, which is more granular as it relates to your area of practice. So what I would say is get familiar with that. Most of your answers as it relates to application will be in there. And then in terms of the guiding or broad brush principles, like Alex said, that's a principle-based standard. That's what the IVS is. Let that be your guide and let that be the standard you work to. But use the IVS in tandem with your sector-specific guidance manuals because those are more technical. I think we had this phrased slightly differently earlier on. Are there any additions or modifications to the basis of value or assumptions, especially forced ones, liquidation or expropriation? The questionnaire is anonymous, so I can't tell if that's very different from the earlier one we answered, but it includes the same basic points: liquidation, expropriation, and then it also talks about the assumptions and then the basis of value. So I believe we've covered that, and I'll move on to another question. Okay, Alex, this is a thank you to you. I would like to thank the speaker, Mr. Alexander, for the excellent work. I also thank the organizer, Taqeem. Okay, so I can share in the credit, I guess, for the timely event. I have one question, please. What are the most critical changes made in the field of valuing machinery and equipment?
I would say that I've sort of referenced them, which is increasing the references to the income and market approach. I would look at both of those sections. Don't automatically assume that you're going to use the cost approach. There are some very good circumstances where it may be relevant to use the cost approach, but also we often recommend the use of one or more method. But I'm probably going to hand over to Pacal because this is particularly his speciality, so I feel a bit weird answering it. So Pacal, anything you would add to that?
The only bit, I think your answer captures most of it, right? The only bit I would add is it's been expanded to include infrastructure. There were a lot of debates around infrastructure during the agenda consultation period. And yeah, because there is machinery and equipment specific infrastructure, and then there's civils and building related infrastructure. Infrastructure as it currently stands sits within IVS 300, the machinery and equipment standards, so machinery, equipment, and infrastructure. Having said that, there's extensive cross-referencing between all the tangible asset standards. So your 400, 410 will basically lead you back to the references on infrastructure in 300. That is the most significant update that I see, but the language is standardized. So where you see stuff on infrastructure, apart from the specific examples that are provided within each of the asset standards, broadly speaking, it's saying the same thing. Another thing is ESG has been incorporated into the asset standards. So you will get references to ESG within the 300, which is the asset specific standard for machinery and equipment. Same as you get it cascading through all the asset standards from the general standards. Yeah, thank you. Alex, anything you want to add or anything I missed?
No, I think that's fine. I think we've pretty much covered everything. I mean, the only thing that I'll probably say is if you really want to check, have a look at the red line version. And it will show you, just go straight to IVS 300 red line, and you'll be able to clearly see what has been added and what revisions are there. But I think it goes back to the same point that if you were doing the valuation for the plant equipment and infrastructure under the current edition, or the one that's just been released, your valuation shouldn't change. It would just be further clarity in relation to how you've done it.
Okay, thanks, Alex. Another one from an anonymous attendee says, will the authority or the council, I'm guessing that is Taqeem, which is the authority, will it provide translated copies to member states? No, actually council, so this is IVSC. Will it provide translated copies to member states, or will the organization within those countries do the translation?
Okay, I can probably answer that initially, and then I'll let you take it from there. So the way that it would do is any organization can apply to IVSC for translation license, but we only have one translation per language, because what we don't want is two different Arabic versions, for instance, that say different things. So in terms of the Arabic speaking part of the Middle East, I believe that Taqeem is working on translation. In cases where you might have Portuguese, Latin American Portuguese, and perhaps other variants of the language, what we do is we encourage the organizations to work together, so there is only one translation per language. So hope that helps.
Yeah, thanks, Alex. Yeah, that's spot on. So Taqeem is responsible for the translation into Arabic. We touched on that earlier on during the presentation. That translation is in progress. And once the official Arabic version of the IVS is ready, it will be made available to Taqiyim members and to the wider Arabic speaking world. Yeah. Alex, another translated one. Say some countries have valuation standards that differ in some regards from the international valuation standards. And updating them is not done in accordance with IVS. Which one is the first to apply?
Unfortunately or fortunately, in order to be IVS compliant, you've got to actually follow the laws of the country in which you're operating, and that will always come first. Now, if there are significant deviations from IVS that you feel affect your valuation, I would refer to them in your valuation report. But if I'm valuing within a country, I have to follow the laws of that country. What you could do is, if you feel that there is such a wide variance in those laws, it might be worth initially sending an email to Paco or myself, and we could make that email available to our membership standards and recognition committee or to our trustees, and encourage them to have conversations to aid the harmonization of standards. But I would never advise you to deviate from the laws of the country and where you're living. That's what you primarily have to follow.
A really good answer, Alex. Thanks. One more. Can you give us an example of the influence of social factors on the opinion of value?
It's quite difficult to do when looking at it, but you know, there are buildings within a community that add or contribute something to the community, and that would have a good element of raising value. If we were looking at businesses, social factors could actually be using slave labor to a certain extent. If it's aware that you're doing that, or you're using child labor, it's going to affect your value as well. We did do a paper on social value that I would encourage all of you to look at. So, for example, there was an argument that certain buildings add to the community, and as such, it increases the value. And I even know that some embassies have argued that there is an embassy effect on having their embassy within the area. But I would say it's a difficult question because this is still a developing area. We're very much trying to look at it and looking at how we can quantify it, because it's a number of qualitative value judgments that are being made, and we're still in a data gathering exercise as well. So I would say, look, refer to IVS. I don't think it's useful for me to read through that list of social factors again, but have a look at some of those. Think about how it would affect the valuation, and you know, you should only really be doing what your fellow valuers should be doing in relation to that. So please use your professional judgment, and please don't be afraid sometimes to turn back to the client and say, I'm sorry, this is not possible, not because I'm being difficult, but there just is not the data or information to do this at this stage.
Thank you, Alex. Just as one more reference point, Taqiyim has a module within real estate 116, which focuses on heritage assets valuations. Within that wider module, there are bits that touch on social value, cultural value, and heritage value. It's passed down a bit further. And then it also talks about approaches to valuations. So the conventional, traditional approaches and some non-conventional approaches in there. So you could refer to that, and that should give you some more information as it relates to social factors in the valuation process and how to consider them. Yeah. Alex, one more. What are hybrid assets?
Well, a hybrid asset is an asset that is not necessarily one type of asset or another, to give you a literal definition. So there are certain assets that would be in between types of assets. I would more look at hybrid valuation approaches and argue that every valuation approach that we use to a certain extent is a hybrid, because even within the income approach, I would be using evidence derived from the market and also the cost approach. But I can't think offhand of a hybrid asset, so my apologies for that. I don't know if one pops into your mind, but I can think of hybrid approaches.
Yeah, that's a good answer. I'm sorry. I'm actually translating Arabic questions into English right now, so I was a little bit distracted there. But coming back to the questions, how do we obtain a copy of the standards, the IVS standards, and when do we start working on it? That has been answered at least in part, but if you could elaborate further, Alex, that would be helpful.
Yeah, so we make the standards available to our member organisations, and it's up to our member organisations how they distribute it among their members. So I would think that probably Taqiyim would have some sort of portal where they put the standard. They may wait for the Arabic version to come through. Also, if you scan the QR code here, it will show you ways that you could actually buy yourself a physical copy of the standard. I understand that we're still in the process of printing. In fact, we're working on the indexation at the moment, but that will be available shortly soon. So that would be another way that you can get access to the standard.
Thanks. So thanks, Alex. This is more a statement than a question. It says infrastructure inspection requires a specialized technician, not a real estate expert.
I mean, my belief is that, when you do any engagement, you need to be competent and you need to be able to do it properly. I would not think that personally, and I can only talk from a personal level, other than saying, oh, there's a big machine here and this is the name of it, that I don't think I would be the right person to actually do a plant and equipment. That's why we actually have different specialisms, However, in some cases, in some countries, assets are inspected by those who are not necessarily qualified valuers. It could be people in training or other reasons. So it very much goes down to your scope of work and what you've actually agreed with the client in terms of who is inspecting it. But Paco, I don't know if you would add any more to that. I'm not in a rush to inspect machinery myself.
what I'll say is looking at infrastructure broadly between what lies within machinery and equipment and also what lies within real estate or structural stuff in terms of civils. It depends on the qualifications of the valuer. There are valuers who wear dual hats who may be qualified in more than one sector. There are valuers who, based on their training and the nature of the practice, they may cut across two areas. So by training, I'm a real estate valuer, but at the same time, I valued infrastructure as relates to machinery and equipment, including heavy machinery and equipment, cooling plants, etc., as relates to petrochemicals, etc. And also valued dams, hydroelectric power dams. So it depends on where you're coming from. It depends on your qualifications. It depends on your academic path and what your firm does. So I wouldn't necessarily say real estate valuers cannot do certain things, including infrastructure. What I would say is you need to be suitably qualified to do that piece of work. And if you're not, make sure you have someone on your team, including be it an external specialist or in-house, who can advise on that part to ensure that your valuation is fit for purpose.
That's perfect. And just adding to what Paco said, if I was doing a development site where they may be stuck in a few roads and I had the cost of the roads and everything else, I'd probably feel capable of valuing that. So it really depends on the type of infrastructure and the purpose of that infrastructure.
Thanks, Alex. Yeah. Is it possible to use the income capitalization method alone, or must another method be used to support it?
I think it really depends on what you're looking at, the quality of the information and the asset that you're valuing. Now, I would say it's less likely with the income approach, but let's look at something else. Let's say you are dealing with a residential apartment, and that residential apartment, there are many similar residential apartments, and they are frequently traded within the market, and they're all in close proximity, and there's not really that great a difference. I would then say that in those circumstances, it's probably not necessary to move beyond the market approach. Though personally, I might look at other methodologies just to check that everything that I did made sense. So I would say that that's more likely to be with the market approach and residential property that's frequently traded. But it's very difficult to answer these questions when you don't actually know the asset that is being valued. And if we did know the asset that was being valued and it related to a particular instruction, then we wouldn't be able to comment on that basis anyway. But I think you've got to use your professional judgment.
Thanks, Alex. I have a slightly impatient questioner here. The statement says, please answer the 2 questions I sent to you. Am I waiting? What I would say is we're answering the questions in the order in which they come. And what I'm doing is in the interest of speed, I tackle English questions, then I go to Arabic questions, then I go back to English questions, then I come to Arabic questions. So please be patient with us. We're trying our best to answer all your questions because they are coming in hard and fast. Yeah, thank you. One more for you, Alex. When the basis of value is the market value, and the purpose of the valuation is for internal purposes for the owner. Okay, let me try to rephrase that because I was reading literally. So the basis of value is market value. Purpose of valuation is internal purposes. Is that the right choice for to use for an owner who's willing to sell, who's looking to sell his assets? Is that the correct basis of value and purpose of valuation?
I mean, it really much depends on your instruction. First of all, I'd just like to reiterate the point that there's never an excuse for doing half a job. So whether it's for the owner or whether it's for an external client, it's irrelevant in my mind. You might argue that you might also want to look at investment value as well, because you might be thinking, okay, I'm looking to sell this. What would an investor look to pay for this? So that might be another basis of value. But once again, it's very difficult without seeing the specific asset and the instruction and whether there would be a difference in value. But I would say that those would definitely be, the market value would be one basis that I consider. I may look at investment value as well. Paco, would you add anything to that? Or?
No, that's spot on. Thanks. Question for you though. I know we talked about a 2.5 hour session with a cushion, 30 minutes, just in case we had a lot more questions coming through. We're at that 2.5 hour mark. Are you okay to continue to take questions? So we have
just checking. My next call is not for a while yet, so very happy to continue taking questions. There's no way that I would rather spend Valentine's Day than expressing my love of valuation. So very happy.
That's a good one. Yeah, thanks, Alex. Yeah. Are there scientific specializations for valuation in postgraduate studies in universities? If so, is it possible to know the name of the university and the name of the major?
I think this is probably something to take offline with Paco. I also think there may be LinkedIn and other discussion groups where you could post such a question. Neither myself or Paco would be aware of every single college qualification that there is around the world. Shooting from my hip, my answer is probably yes. But first of all, you need to look at what is that aspect of scientific study that you want to do. And it's also quite common in many markets that people come from a non-cognate degree. So they may have started off studying some aspect of science and then went on to get their professional valuation qualifications and do the relevant exams in relation to that as well. But I think maybe if you have an offline discussion with Paco where you're slightly clearer about what you're looking through, and then Paco can share it with me and we can always ask through other members of the IVSC to try and find out. You know, thinking aloud, there's Membership Standards and Recognition Committee and Advisory Forum, both of whom might be aware of further qualifications, but we need to know what scientific study, first of all.
Thanks. That's a good answer, right? Because, like Alex rightly pointed out, it depends on the jurisdiction and it depends on what exactly you're looking to qualify in or study. So there are some countries that have cognate courses, which give you a leg up once you come out towards your accreditation pathway. And like Alex also rightly pointed out, there are non-cognate degrees where pathways are provided um, to get your qualification, even though you may not be coming from a valuation-centric degree. So yeah, I'm happy to take that offline. Send the question through our communication department. I will answer. A lot of my questions are coming from anonymous attendees, so it makes it kind of hard to figure out who is asking the question. So I would encourage you all to register with your actual names going forward because it makes it easier to find you and respond to you if it gets to that point. Yeah, thank you. Currently, how many countries apply the IVS other than the Kingdom of Saudi Arabia?
I'm not sure of the exact number. If you go on a website, it's something like about 103 or more. I know we've got over 200 member organizations. We have further information on the website. And there's also the issue that they may apply it in terms of tangible assets or business valuation, but not necessarily financial instruments, because we're developing that. So it also what is meant by adoption and implementation. I believe that there is some sort of list that you can find on the website. And if you have difficulty, you can always send an email to my colleague Richard Stokes. We can provide that email and he could give you further clarification, because I'd rather get you an accurate answer than make up a number now.
That's a good one, actually. Thank you, Alex. Yeah. I think we've answered this already, but it's come again. So maybe the questioner didn't get the original answer, or we require further elaboration on it. It says, did the amendments, I'm assuming the amendments to the IVS or additions, touch on expropriation?
The answer is no, we don't go specifically in relation to that, but as Paco mentioned, there is a manual from the Kingdom of Saudi Arabia, the Royal Kingdom of Saudi Arabia, and there is also a course in relation to expropriation valuation. So please contact Taqiyyim directly. They can give you guidance, on what course you have to take if you don't have that qualification. And if you have that qualification, they can direct you to the latest version of the manual as well.
Thank you, Alex. There's a question here, which I'm sure Kim would love, but you're going to have to field it since he's not here. What will be the role of AI or artificial intelligence in the valuation profession?
Okay, so this is something that we're very much looking at the moment. So AI apparently can already pass its law degree and do a PhD. So it is developing at quite a fast rate. Now, we are not scared of AI. I know that a number of people think, oh my God, it's going to take over the world and kill us and take over all valuations at the same time. But, it's not that long ago that we were using slide rules and tables, then we moved to calculators, then we moved to computers. So for us, this is just another tool that the valuer will be able to use. At the end of the day, the valuer will need to be involved in the process. He'll need to review the output that's produced by AI. At the moment, it couldn't have probably predicted the coronavirus crisis. Who knows what it can do in the future? So we will be including this as a topic on our agenda consultation. We see automated valuation models and AI as very much fitting together. But also we're aware that, if things go awry and it's producing its own comparables and everything else, that is just going to be distorted, the inaccuracy of it as well, which is why we believe that a valuer will always be involved in the process to some extent, because we're going to have to review and examine the execution of any model that is used. At the same time, both Pacal and my experience has probably been that the valuation is only the beginning of what a client wants. What they actually want is all your professional advice and your experience in relation to the market and the opportunities that you have from from your working life. So we don't see it as a threat. We see it as something that could be very positive for us. I can see potential advantages in ESG and in gathering data, particularly on the S and the G, but we can only do standards from where we are at the moment. We will continue to review it. We will make it a topic for our agenda consultation, and standards may evolve as AI evolves. But just to give you a word of caveat, AI can't lie. So if any client happened to put in a bit of your report that could have been done on an AI system and said, "Did you write this?" AI would respond with what it wrote and the date that it wrote it. So there are things that you need to be cautious with in relation to that as well. But I actually think that it's something positive for the industry. We can only do the standards where we are now, but we're continuing to review, and it will be a big discussion for the Tangible Assets Board when they meet. I don't know, Paco, if you want to add any more to that, because I know that we've been discussing it quite a bit.
That captures it pretty much, yeah. So yeah, I think you covered all the considerations. A few more questions to go. Some of them are repeats, but they've been asked again, with the questioners, Ayman in this case, asking for it to be re-answered. So we'll take another stab at it. Ayman has two questions. The first one is it possible to re-answer the question about using or valuing an asset based on goodwill without the client's request to do so? I know, Alex, you tried answering that earlier on, and the question, and it's by its very nature, is quite broad brush, but I don't know if you want to take another stab at it.
So I mean, I will go back to our board if you want a more detailed answer. But obviously, from my point of view, when I get a valuation instruction and the scope of work, I try and define what I'm doing and what I'm not doing. To a certain extent, goodwill is intangible. So it also depends on your instruction in relation to this. I was probably answering more how you value goodwill. And that's why I was actually pointing you to our perspective papers. But if you are impatient and you want to click a quicker answer, I think the easiest way is just to click on the standard, do a search on the PDF and type in the word goodwill, and it will automatically show you the references within business valuation in relation to the valuation of goodwill, and whether you should consider it in the instruction, whether the client is asking it or not. I mean, I believe that I'm sort of, to a certain extent, and it may be naive of me, empowered to make the instruction, because to a certain extent, I believe that the instruction should be decided between the valuer and the client. And if you really feel something should be included in the valuation, which it seems to me like you do, because this is the third time you've posted this question, apparently, then maybe you need to have that conversation with the client and say, I do believe goodwill should be included in this valuation instruction, and these are the reasons why. So because I very much see that the terms of engagement or the scope of work is being agreed between the valuer and the client. I don't know if you want to add more to that, Paco.
Just a little bit. I want to just hop on the client's request to do so part. What I'd like to point out is you're a valuer, yes, but also within valuation, there's an advisory component, and you are the expert in this case. So when you're advising your client, the client may actually not know what's required for that mandate. So you need to define your scope of work. You need to agree it with the client. You need to make the case to the client as to why you may need to do certain things. That is where the advisory bit comes in, because you are the subject matter expert. The client is waiting for a deliverable from you, which they will make a decision based on. So the client has a valuation problem, you're providing a valuation solution. So make it clear in your scope of work. And if it's required that you do certain things to comply with the IVS and to comply with best practice, do so. The clients will sometimes want a higher value, want a lower value, and will try to game the process to get what they want. But you are the independent advisor to the client. So just bear that in mind, and you are the expert, not the client. Yeah. Thanks. How can local requirements be reconciled with the IVS requirements? Yeah. Once again, I think you touched on that earlier on, Alex. If you could expand,
Yeah. Just looking at that, we have an overarching principle in place there, and so it should be very easy to comply with the requirements and with the national requirements. If you feel that there is a vast difference between the two,
Alex, you're breaking up a bit.
Can you hear me now?
Yep.
Brilliant. So what I'm basically saying is you always have to follow the national requirements. And if you feel there is a wide deviation between this and following the national requirements, then you should state that at the end of the day, to produce an IVS compliant valuation, you have to follow the rules of the jurisdiction.
You're still breaking up a bit.
Okay, I'm going to try something else.
Perfect. I'll hold. Yeah.
Can you hear me now?
Yep, it is better. Thanks. It's not. All right.
How's that now? Can you hear me?
Yeah, I can hear you now. Thank you.
Okay, so you've still got to follow the jurisdiction of the country in which you are operating, but if you feel there is a wide divergence between following IVS and following the national legislation, then you should state that within your valuation report.
Thanks, Alex. Yeah. There's one more question here. I think it's also a point of clarification. Question says, does this mean that the standards issued on the 31st of January 2024 are not effective until the 31st of January 2025? Simple answer is yes. Alex, you want to expand on that?
Yes, but to a certain extent, it's your choice. So it will depend on what Taqeem tell you in relation to their requirements. We always encourage early adoption. We don't think it will produce a difference in value, but you have to clearly state which standard you're using and why you're using it. Just moving back to goodwill, if it's okay for a second. What I've done here, which might have been the reason why I went quiet for a little bit, hopefully you can all see the screen here. I've just done a little word search that I was suggesting that you do on goodwill. And when you look at the standard IVS 210 that deals with goodwill, what we don't state is whether you have to incorporate it. We tell you about how you do it. In many cases, it could be part of the value of it. We go into detail on goodwill, but at the end of the day, it is still down to your instruction. So you have to agree with the client what you're going to do and what you're not going to do. You can't suddenly bring something in and charge them an extra fee because you might find they're not happy with it. So it's really down to the scope of work. But I do believe that scope of work is not necessarily a negotiation, but it should be a conversation between the value and the client, and the value is the professional. The value is the one who should be advising the client on what is appropriate for the instruction. And if you feel that goodwill needs to be incorporated in the valuation, then you need to have that conversation with your client.
Thanks, Alex. Yeah. So there's a questioner who wants clarity on when deviation from the standards occur and whether this is referred to in the, or whether this should be referred to in the valuation report.
So to a certain extent, I think it should be referred to within the report if you feel that the deviations are so significant that it would affect the value reported. So obviously you have to follow IVS to produce an IVS compliant valuation, but the difficulty is where you have authoritative, regulatory, or legislative requirements that require you to deviate, in which case you should just state the nature of the deviation and why you have deviated from the standard in your documentation. Now, beyond that, there's a further decision that you may want to make, is if you feel that for whatever reason, the results of the valuation are so different through using these jurisdictional requirements rather than IVS, then obviously you should make your client aware of that in the valuation report.
Thank you, Alex. There's a question on criteria for a short report versus a detailed report. I'm guessing whether both can basically qualify as IVS compliance.
So we did mention that in some cases you can have abbreviated reports, you know, but you would still need all that information in your documentation. So the first point that I'd like to highlight is the fact that you give a shorter report does not mean that you do less work. All the work still has to be there. It all still has to be in your documentation within your file. And so, yes, there may be requirements where for mortgage lending, people might have a specific pro forma, you know, that you need to use in the valuation, and you've got no choice. That's the instruction. I could give you the example of mortgages in the UK in relation to that, where there will be specific pro formas for that. But at the end of the day, all that information still needs to be in your documentation. I can't give you what a short form report is, because it varies according to the circumstances. I can tell you that many years ago, in the bad old days, I was shown a short form report, and it was a picture, an address, and a number. And I was shown a long form report, and it was a picture, an address, a number, and a map on the back. And neither of those would be compliant with IVS. We're quite specific about what needs to be included in a valuation report. And if it's not in your valuation report, you can make reference to your documentation.
Thanks, Alex. It's interesting you say that from a long time ago. More recently, in the last couple of years, we've seen a report of that nature, a picture and a value, one page, right? And that obviously is not compliant with IVS. So it goes back to what Alex was saying about documentation, your data, your inputs, your investigations and inspections, as the case may be. Depending on the nature of a report, it may be a short form or summary report, but make sure you still do the detailed legwork required for your valuation analysis and document it. Because in some cases, especially as it relates to fairness opinions, fair value reports, and etc., auditors require rafts of information. It may not all be readily available in your report. What I encourage is the more you can share in your report, do so. A lot of times, valuers say they don't want to share too much because it's confidential information to them. You did sign a contract with your client, all right? In part, the more answers you provide to your clients in the report, the less questions they'll come back to you with, and it makes the report clearer to them. So wherever you can, put the detail in there, put the comparable analysis in there, put the adjustment grids in there, put the support for how you built up your discount rates, cap rates, sources, etc. in the report. The client is paying for a deliverable. I'm also aware of the fact that sometimes commercially, especially if you're doing a lot of cookie cutter reports, or if it's mandatory, depending on the clients that you report in a certain way, you cannot put all that in there. The fact that all of it is not in there does not excuse you from doing proper due diligence and proper valuation analysis. So just bear that in mind. Yeah. Thank you. This is a repeat question, Alex. So I think you answered that. The effective dates versus the publication date for the IVS. So yeah, effective adoption 31st January 2025. In terms of early adoption, it is encouraged. Practical issues as it relates to Taqeem, we need to give you an official translated Arabic version of the IVS. There are practitioners who practice in English and who issue reports in English. the IVS effective January 2025, you can work with that. If your primary language for business and for your client deliverables is in Arabic, then I would encourage you to wait for the official translation before you start using it in terms of adoption. Yeah, thank you. Okay, so I think we covered pretty much most of the questions. There are a couple which I was not able to get around to, but I'm aware of the fact that our cushion of 30 minutes is almost up, and we have barely 5 minutes to go. So, Alex, is there anything else you want to add in terms of the presentation? And,
Just want to thank you all for your time. If you have any questions and you get a light bulb moment afterwards was, I wish I asked this, please feel free to send Paco and myself an email. We'll try and assist you wherever we can. And I hope that the presentation was useful and it will help clarify the changes to IVS. Obviously, many of these changes will filter through into the Taqeem manuals over the coming years as well. I don't really think there's anything that probably Taqeem is not asking you to do anyway. It's probably just clarifying some of the bits that need to be done. So, shukran katir. Thank you very much for your time. Peace be all upon all of you, and masalama. Thank you.
thank you, Alex. Just one more bit in terms of housekeeping. So feedback, any feedback you can provide, and we've noted some of the feedback coming through the questions. We've identified areas for expansion, especially in and around business valuations and financial instruments. Like I said, we're looking to do a wider presentation with expanded areas at some stage in Q2 once the official Arabic IVS is ready and you've had the chance to look through that and familiarize yourself with that. The slides for that will also be in Arabic. So for people who want candidates or delegates whose primary language is Arabic, that will be helpful. So we will do that. Thank you all for your patience. We tried our very best to answer as many of your questions as possible. I think broadly we did succeed. Thank you, Alex, for a wonderful presentation. And thank you all for taking time out of your day to attend this presentation. Thank you all.
Thank you.